Your great-grandparents lived through the Depression, and now you're about to live through it too. That's right. The sky is falling, everything's done. Is that right, Lindsay?
No, Matthew.
All right. Hi, I'm Matthew Parsons, Knoxville real estate expert. Today I'm with
Lindsey Whitworth with Mortgage Investors Group.
Okay, so I brought Lindsay in today because we want to talk really quickly. We've seen some banks that have failed in the last couple of weeks. We wanted to wait and see what the fallout of that was before we did a video and talked about it. So, Lindsay, what can you tell us about, number one, what happened?
Yeah, so the banks failed because of their balance sheet. What they were invested in heavily lost value, basically. And then people decided that they wanted to take their money out of the bank. So a little rumor mill started, right? So then the people come, take the money out of the bank, and now all of a sudden the bank doesn't have the money to give them. So run on the banks fail.
Okay.
Yeah.
And were we talking about a ton of banks, or were we talking about just a couple of banks?
Just a couple of banks.
Okay.
Yeah.
All right. So just a couple of banks are experienced a run, and as a result, then, you know, it's funny because I always, finances is so much about trends and feelings a lot of times.
Oh, lots of feelings.
Right? Lots of feelings. Like, how do I feel about the market?
Yes.
And that's going to end up driving where prices and things are happening, right?
Yep. Absolutely.
So we saw this run on the bank. Okay. So what has happened with mortgage rates and things like that since we saw this run on a couple of banks?
So initially, the markets were not happy. They were not happy at all. So interest rates went up very quickly, over very, very volatile, you know, up and down, just because it was just the fear of the unknown. What was actually happening? Right. You know, let's figure this out. Let's dissect this.
Feelings.
Is this,
Again,
lots of feelings.
Feelings of fear. In
all
this
in
case,
feels,
yes. Feelings of fear are always going to lead to volatility and higher rates.
1,000%. Yeah, people are going to go pull out their money, and maybe this is going to happen to more banks, and so then people get worried about their money.
Okay. All right. So we saw the rates go high.
Yes, rates super high.
Okay, and here we are about 2 to 3 weeks after this has all happened.
Yes.
What have rates done since then?
So really, I think the markets were waiting for the Fed meeting, which happened last Wednesday. And then, you know, after the Fed meeting, they always have that press conference. So Chairman Jerome Powell, he comes out and he starts talking. And sometimes that's good and sometimes it's bad. So the press gets to interview him, basically, right? So the Fed did end up raising the interest rate, the Fed funds rate, you know, how banks borrow money by 0.25%. So that was kind of they thought that was going to happen, but they also, you know, markets kind of wanted the Fed to do nothing, like stop raising rates, because this is what caused the problem with the banks failing based on what they were invested in, which was heavily mortgage-backed securities. So anyways, once the Fed met on Wednesday, they did go ahead and raise the rate another 0.25 point. The press conference came out, but markets responded really well. So inflation is coming down. It's under control for the most part, and will continue, but I think that was positive, and I'm glad it was positive because we kind of needed that, and brought the rates down to low 6s. Which is great.
All right. So they adjusted and they've come back down.
Yes.
And my thought is we're seeing a trend towards down. I think most of the prognosticators, yourself, I don't know if you're included in this, let me know, are continuing to see where we're going to see rates continue to go down. Is that fair?
Yes, and that is fair. And you know, something we've maybe mentioned before, like the May 10th date, May is a really important time frame, just based on inflation year over year. Some of the CPI numbers are going to change in May for the better. And that's where a lot of people in the markets get really mad at the Fed, because they're like, this is going to catch up. Don't keep raising the rates. Like, just hold tight for a minute. Like, this is all going to get better. So with May coming, you know, we expect to see a very strong, you know, push lower in the mortgage rates in the 5s through the end of the year.
So let's talk about what this means for real estate really quick. You know, and you and I, if anybody's watched these videos, they've heard us just echo this over and over and over again. Hey, da 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 da. But it's some tried and true stuff here. I can't tell you the number of times I've seen and heard people say, I'm going to wait.
Yes.
I'm going to wait for rates to go down, or I'm going to wait for prices to go down. And there are a couple things I want to say to that on at least the prices side, and you can speak to the rate side. Number one, prices in Knoxville will not be going down. I'm going to tell you that right now. I just did another video for the Kingsgate subdivision. We saw a 13% increase over last year's prices.
There you go.
And guess what? When rates go down, we're going to see more people go, oh, great, now is a great time for me to buy. More buyers means
more
higher
competition.
prices, more competition, higher prices, especially as we continue to have low inventory. So if you're waiting, do not do so, okay? Because here's the other great thing. If you buy now with a rate of what? Give us a
6%.
ballpark. 6%. You buy now with a rate of 6%, and if it goes down as if we anticipate, you have the opportunity to refinance.
Absolutely. Yeah. But you bought at a time when prices may not be as inflated as they would be back when now when rates are lower. So you're going to get in a good time. Yeah.
You cannot turn around and go, hey, I'm going to sell my house, now I'm going to turn around, I'm going to sell my house to myself for less money. That's not how it works, right? But you can do that with your rate. You can say, I'm going to turn around, I'm going to sell myself my house at a lower interest rate. You can do that. So forget about all of it. Now is going to be the time to move forward and to buy, right?
Yep.
Now, one other thing I want to talk to you about, Lindsey, and you and I have had conversation about this. Listen, we see banks fail. We see stocks go way up. We see them go way down. I've had clients who have backed out of the market because they've seen their 401ks that are basically, that's their assets that they've put, their retirement that they've put into the stock market.
Safety net, right?
Yeah. They've put their safety net into something that is going to go up and down and up and down.
Right.
And right now it's down, and so now they can't buy. But real estate is different, isn't it?
It is different. And I think it's definitely different in our market. And like we've talked about so often is that we are still seeing appreciation. We even saw, yes, we had a little blip in the radar back in the 08, 09, 10, those days, but this is a different time period, right? Different things going on in the market than what were happening back then. So if you feel like, that fear is coming into play and you're afraid about your money being in the bank or your money being in the stock market, I think real estate is such a better investment, long term. That way, you're going to see appreciation. You don't have to worry about FDIC insurance. Is the bank going to, be able to give me my money? You've got that, and you honestly can see it, right? It's a real thing that you can put your hands on and touch that house.
Exactly.
Right? That land.
Yeah, and listen, we're not even talking about wild speculation. If you can get to a spot where you can invest in some really, really solid areas of Knoxville, some suburban homes. We got some great places in East Knoxville that are appreciating greatly. We've got some great places in West Knoxville that will always appreciate. You invest in some of these kinds of places in terms of your investment, you're going to be so well off, at least in the long term. If you're just looking at a long term, I'm going to hold on to it, I'm going to let it work for me. And who knows, maybe you can even get some cash flow out of it, right? As turning it into a rental. So listen, if you want to talk about this stuff and create a plan that works for you, give me a call or a text at 865-761-9797. Lindsey, how can people reach you?
On my cell phone at 865-306-3725.
There you go. I'm Matthew Parsons, Knoxville real estate expert. Thank you, and God bless.